Hey guys, happy Monday evening. I'm not normally recording my video this late in the day, but it was one of those Mondays. I will note I still have my coffee cup on my desk from this morning. That didn't go anywhere. So yeah, it was just one of those days. So I'm not going to miss my opportunity to get on here and talk about the market, even though it is later than usual. And I hope you all are ready for an update. So first of all, if this is your first time to my channel, I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona, and every Monday I come on this channel and talk about the Phoenix real estate market and give updates on what's going on. Make sure you subscribe if it's your first time, and I also post videos on Friday about all other things about Phoenix and also real estate. But you guys, let's talk about Zillow. They've had some pretty big news. A few weeks ago, I mentioned that they announced that they were going to stop or pause buying homes for the rest of the year. And then last week, they came out and said that their entire iBuyer program is being shut down. So when you look at the homes that they were buying, we realize that they were buying homes very high and then selling them for low, which doesn't really make a lot of sense and isn't really the best business model. So whatever happened with Zillow, it didn't work out. And sadly, they are laying off a huge portion of their workforce that were supporting this iBuyer program. So it really is a sad thing to see this all come to an end. But how does it affect the real estate market? Well, they have like 7,000 homes that they have to sell. That's nationwide. So I don't know how many they have to sell in Phoenix, but there's a good chunk that they need to offload at this point. And depending on how many that is, I really don't think that's going to affect our supply all that much, but we'll see what happens. Also, that is one less iBuyer or, major investor out there in the market purchasing homes and increasing our demand. So while, their impact might not be that significant, we'll see if that changes anything as far as the demand that we're seeing in our market now that that major player is done. So that's the big news with Zillow. They are no longer an iBuyer. I'm sure they will still continue to be a home search site and very prominent in that world, but their entire iBuying arm is done. So that's the biggest update I have as far as that goes, and we'll see how that affects the market. Not sure that they played that significant of a role where we're going to see a change, but who knows. Wanted to also talk about some stats. So let's talk about where we stand today on some of these big statistics in the market as compared to where we were at kind of the peak of our crazy frenzy market. So today our annual appreciation rate is 27.6%. That is down from 39% at the peak. Sales over asking price, we are sitting at 46% of sales are closing over the asking price, which is down from 60% at the peak. Our median amount over listing is $10,000, which is down from $20,000. The average sale price per square foot is about 0.2% over the listing price, and that's down from 1.8% over the listing price at the peak. And our days on market is 10 days, which is up from 5 days on market. So all in all, these stats are definitely showing a softening, right? So we've gone from 39% appreciation to 27%. Our days on market are higher. There is less amount going over the listing price. But you guys, we still have 46% of homes selling over the listing price. We have $10,000 being the median over the listing price. I mean, we're still in a crazy seller's market. So, although things have softened a little bit, this is still telling us that we are in a place where it is very competitive for buyers. And if you are a seller, you are still getting over your asking price for, 46% of the time. And you can sell your house in about 10 days median. So, it's still a crazy market. It's just not insanely crazy like it was a few months ago, like back in May. So that's kind of where we stand today. Let's talk about the Cromford Market Index. So again, if you're new here, I subscribe to a subscription called the Cromford Report, where they analyze data from the MLS here in Phoenix and give us all of these great statistics. And one of the things that they've created is the Cromford Market Index, which is really an index that measures supply and demand in our market. And it is the predictor of future price appreciation, whether prices are going up, staying stable, or coming down. And so the way that this index works is any reading above 110 is considered a seller's market and prices will continue to increase. Anything below 90 is a buyer's market, and at that point, we would not have an appreciating market. So today, we're sitting at 348, so very well above 110. At the peak, as I was, referencing when the market was even crazier than it is today, this market index was sitting at 514. So we've come down very far from 514, but we've been kind of hanging out at 348, 347, 346-ish the last couple months. We haven't really made any big changes. The biggest thing that has changed has been our demand index, which is 22% above normal demand. And a lot of that has been because of the iBuyers. So going back to Zillow, without them in the market, will demand come down a little bit? Possibly. They were buying a lot of homes, but I don't know if they were buying enough to really change what we're seeing there. We'll see. And then our supply index is about 65% below normal. So we should have many more homes on the market for sale if we were in a normal market. But we're 65% below normal for our supply, what we should have here in Phoenix. So demand is high, supply is low. That puts pressure on pricing because we have more buyers who want to buy homes than the amount of homes that are available for sale. And that's kind of been the story for quite a while. That said, when we were moving towards the crazy market that we had earlier this year, our discrepancy between demand and supply was larger. Demand was extremely high and supply was extremely low, and supply and demand were going in opposite directions. Recently, they kind of came closer together. Now they're still far apart, but supply has slowly increased while demand was also going up. And so we're not seeing as significant or aggressive, pressure to increase the overall market index. So hopefully that makes sense as to how, they explain this and reference this and why it means what it means. But at this point, with a market index of 348, with 110 being, considered more of a balanced market, we're definitely in a seller's market. So if you are out there trying to buy a house, it is still really freaking competitive. It's not as insane as it was months ago, but man, it is tough. So you're still competing against multiple offers and appraisal waivers and inspection waivers and all the things buyers are doing out there right now. And if you're a seller, you're still in a great position. You're getting likely offers over the asking price. You're likely getting multiple offers, all of those things, assuming that you're priced in a competitive way, priced correctly. But it's, a great market for a seller. So all in all, we're sitting in a place where prices are likely going to continue to increase because our supply is so low and our demand is so high, and there's just no way that prices are going to come down when we're in a situation like this. That's not to say that things could change and we could go in a different direction, but as of right now, where it stands today, all of those factors indicate an increase in prices. So again, all this information that I report on is from the Cromford report that I subscribe to, and all of that comes from the MLS data. So hope this information is helpful for this little update. Thank you for waiting until late in the evening to check this out. And if you are thinking about buying or selling real estate and want to chat, you can hit me up. I have my contact info down in the description below. You can comment below with your questions and I will answer as best I can. But appreciate you all watching every week. Thank you so much. I'll be back later this week with another video and of course next Monday with another update. So everybody have a great week.